What's going on, everyone? It's your boy Kenny Trades 52 back at it with another video. Today is June 9th, 2024. In today's discussion, we're going to be going over futures trading 101, focusing on ES and NQ. Pretty much, I've been getting a lot of questions regarding futures trading, regarding the prop space and prop trading industry and what's kind of going on there now that it's a little bit of an easier way to get into futures trading, being that it's a little bit of a smaller barrier to entry. So today we're going to be doing a beginner's guide to trading the E-mini S&P 500 and the E-mini Nasdaq-100, kind of like an informational workshop here. So let's get into it. All right, introduction to futures trading. So what is futures trading? Why trade futures? And what essentially is it? So futures trading essentially is trading a asset futures price. Basically, what we're going to be looking at is the fact that we can trade this very similar to stocks and options. However, the difference here is that we're technically buying and or selling agreements to trade something at a set price on a future date, right? It's very similar to stocks, very similar to options, but different in many ways, being that with stocks, you can buy and sell and technically infinitely hold a position and, have a reflection of profit or loss based off of the position that you purchase or sell in that transaction. Options is the right. You could buy or sell, the agreement or the right to buy a stock at a specific price. And with futures, very similar, but the difference is that you're trading on something at a set price on a future date. So when you want to think about it, the concept of this, right, essentially goes into the fact that the future contracts are standardized agreements, like I said, to buy or sell a specific asset at a predetermined price at a future date. Some of the benefits include leverage, right? You get a higher leverage ability, meaning you can control large amounts of money with a smaller investment size. There's a lot more liquidity in this market. You could diversify a lot better in this market, and the trading time is a lot longer, meaning it's 24/5 trading. Pretty much futures are open from, which we'll get into this a little bit later, but futures open on Sunday, 6 p.m. Eastern time, and they don't close until that following Friday at about 5 p.m. Eastern time. So it is a 24-hour market for about 5 of the trading days, if not 6. 5 trading days, you get about 48-hour period to kind of take a break, if you will. But the cool thing is that you can, just like stocks and options, you can profit both ways. So you can make money whether prices go up or down. And as long as you're managing risk and seeking some good profits and stuff like that, you can kind of take advantage or arbitrage the price action there to make a profit. All right, so let's get into the next slide. Basics of ES and NQ. What are ES and NQ, and what does that mean? ES is the symbol or acronym for that tracks the S&P 500 index. It is essentially the futures derivative of SPY. That's what everyone's pretty familiar with, right? The S&P 500 ETF. Similarly like that, except for the actual index itself. So the S&P 500. NQ in the retrospect is for the Nasdaq. It actually tracks the Nasdaq-100 index. And, we would be trading prices of these two on future dates, right? So that's what ES and NQ are. The differences, right, in contract specification is that ES has a contract size of about 50 times the S&P 500 index, while NQ has a contract size of 20 times the NASDAQ 100 index. Now, when we refer to tick size, basically what that means is that it's very similar to how SPY, if SPY is at 450 and it moves to 451, it moves up $1. Well, in futures, we move in increments of ticks or points. And you'll see a little bit of an example of this later, but essentially one tick in the S&P 500 or on ES is equivalent to 0.25 points, right? Conversely, to get to 1 point or a dollar move, you will see that it actually requires 4 ticks, right? So it's very similar, very, very easy to understand. You could kind of think of it like this, like 1 tick is equivalent to a 25-cent increment in the price of ES or NQ. And a 4 tick move is equivalent to 1 point or $1 increment in the actual price, right? Very simple. Like I said before, trading hours are 24/5, right? So you could trade 24 hours for 5 days a week. And trading's from 6 p.m. Sunday to pretty much 5 p.m. Eastern on Friday. So futures contracts and how they work, right? the same way you trade stock and options, right? You could buy and sell the contracts, right? So you can go long and you can short. That's pretty much the two different ways that you could trade this. The nice thing about futures is there's no theta decay, but basically it does have some margin requirements that we will pretty much get into right now and see how you can actually understand how much leverage you're using. Okay, so margin requirements. Basically, if you go to tradeovate.com, you can actually see here. We'll just go to the main page. As you can see, go to tradeovate.com. It's a broker that trades futures. And if you go to trading and click on margins, you could actually see all the different markets that you can trade here and pretty much all of their exchanges, groups, and the margin requirements for them. Right. So you could see if we just scroll quickly, you'll probably recognize some names like E-mini Russell 2000, E-mini S&P 500, right? These are micros, so they're a 1/10 the size of the actual minis. The minis are bigger, which you can see here, E-mini S&P 500, which you just saw in the PowerPoint, E-mini Nasdaq-100, also in the PowerPoint, and the E-mini Russell, which is, the Russell 2000. There's Coinbase and crypto futures. There's also futures that you could trade, such as, let's see here, copper, platinum, palladium, gold. So there's tons of different futures. They even go into food. So like corn, wheat, soybeans, right? So different commodities of whatnot. And basically, you could almost trade at almost any type of futures here that has to do with some sort of agriculture and or market, if there is one. If we go into what we want to see is the most common or the basic three are going to be your S&P 500, your Nasdaq 100, and your Russell 2000. Basically, when you're looking at this, you can kind of see that these are the value points and the margin requirements that are needed essentially to trade these instruments, right? So for the S&P 500, it requires about, you can see that the initial margin requirement is about almost $13,000. The daily requirement is about 500. You could trade them from Sunday open at 1700 Central Standard Time to 1600 Central Standard Time the next day. And basically the value points for each are about $50. Like I said, it moves in increments of ticks, right? Or points. And so a 0.25 tick, right? Or sorry, excuse me, a 0.25 point, right, is equal to one tick, which gives you about $12.50 in profit per quarter point, right? If you're looking at what the value of one whole point is or 4 ticks, well, you would just multiply these two numbers by 4 and you would get about 50. So when the S&P 500 E-mini S&P 500 moves up 1 point, that 1 point is equivalent to $50. So if you were to go long at 5,000 and it ends up at 5,001, you would make $50 for that long, right? And then, obviously some fees. We'll go into pretty much the NASDAQ is somewhat similar, but a little bit different. Requires a little bit more margin, almost about 19,500 and change, about 1,000 daily margin. Value point is similar breakdown, but different in value, right? So a 1 tick move is equivalent to $5 or 0.25 points is equal to $5. So every point that the NASDAQ 100 goes up, it's about $20 per point, right? Same with the Russell, which you'll see here. Not even going to go into this, but you could see it's the same exact thing, right? 1 point on the Russell, when it moves up or down, it's equivalent to $50, and every 0.10 points is equivalent to a $5 move. Now, if you go to something like tradingview.com, you can actually look at the charts of all these different futures that they offer. This is a little list that I curated for the video and stuff like that. So we'll just look at the ES and S&P 500 mini and the NASDAQ, but you could look at like crude oil and stuff like that, et cetera, depending on what you want to trade. And basically, when looking at this, you'll see a couple different things here, right? So this is the weekly chart. We'll go into the daily chart and we'll actually go back into like the 15-minute. And what you see is basically, if you're looking at a 1 minute chart or something like that, when you zoom in, this is the point system that we were referring to that is equivalent into the 0.25 points for every, I think it was every, $5 for the NASDAQ, et cetera. But basically, every time that you could see the price action move up or down, it's going to be equivalent to that kind of price point that we talked about prior. So when looking at the NASDAQ, you'll see that every 25 cents, right, or every 0.25 points, quarter point, it's going to be equivalent to a $5 value, right? Every dollar that the Nasdaq goes up or down, it's going to equate to 20 bucks. For ES, we'll pull that up right now. E-mini S&P 500 futures, right? Very similar concept, except the values are different, right? We're going to zoom out to like a 15-minute time frame real quick. And so you'll see that basically it's almost a similar metric, but slightly different. When you zoom in, you'll notice that these are kind of broken down into the same thing, 0.25, or it's labeled every, looks like half a dollar, right? So every 0.25 points that ES moves up or down, it's going to be worth $12.50 in value, and every point is about 50 bucks. So if you quickly just look at the, let's say, 15-minute time frame, or actually let's just go into the daily, find a good point or chart, and you'll see here on this candle for the day on Wednesday, the 5th of June, 2024, the ES futures actually pretty much opened up at about $5,305. It reached a high of about 5,368.25, right? Which is that top peak. The range of this is about 62 points, right? So essentially what that looks like is the following. It's going to look like this. Let's get a text box here, right? So that candle right there moved up 62 points, right? We know that uh every quarter point is going to be equal to about $5. I'm sorry, we're doing ES, so it's going to be equivalent to $12.50, right? So 1 point, or that times 4, is going to be equal to about $50. And if we had 62 points, we know that 62 points being the range times the $50 that is equivalent per point will give you about a value of 3,000. Yeah, 3,000. Oops. $100, right? So you can see on this day itself, if you happen to just bottom tick, which is, I mean, obviously that's really challenging, but if you were skilled enough to bottom tick this entire candle or catch this entire move, you essentially would have made, and you said, let's just say you long the bottom, sold the top, you would have made about $3,100. Now that's a pretty solid investment or trade just for 1 day worth of price action. A lot of people don't make $31,000 in a day, but in trading, you could obviously see different ranges of that. If you look at NQ, kind of a similar thing. Just give you an example of what that looks like, right? So NQ obviously has a bigger range in value, right? So pretty much the same day, June 5th, we could do the same kind of thing where if we take an example here, we'll look at this and we'll say that this range was about 373.25 points, or 2% move. So for NQ, we're looking at about 373.25 points, right? It's every quarter point is equivalent to about a $5 value. 1 point, right? So 4 of those is equal to about 20 bucks. Let's just make that a little bit better there, right? And this, let's just write this out also. That's equal to 1 tick. This bottom one is equal to 4 ticks, right? And we had 73, roughly 373 points in that day. So 373.25 points times the $20 valuation, right? To get the 4 ticks. So we'll say per 4 ticks, or 1 point, it's going to be equal to a nice premium of about $7,464, right? So if you were to pretty much do the same thing that I said prior and catch the entire bottom to top and that whole range of 373 points, etc., you could have made almost $7,500 on the day. Now, the cool thing is, yes, that is the daily chart. Obviously, the ranges are a lot bigger here. But if you actually break it down into something smaller, right, you could kind of see here another example of what you could make in a day. So for example, I personally like to trade NQ. I think it has a lot of more opportunities to get in and make multiple trades, kind of really accumulate and stack, compound your trades and your profits, right? It gives you a lot more opportunities just because of the large range. But you could see, right, that was the daily time frame that we're looking at prior. On the 15-minute, even getting one of these bigger candles, let's just say if you even caught this larger sell-off candle here, just using regular kind of like technical analysis, let's just say you were trading the day, you're watching the market move, you could see that there was a relative bottom there, and you're kind of waiting for, let's say, some sort of break similar to this one. So, whatever the case is, let's say you had some sort of resistance here and you were waiting for a short here at 19, 115.75. Well, you could pretty much see that the range of that candle was about, just alone in this one 15-minute candle, was about 109, almost 110 points. If you happen to catch that whole move, right, let's just kind of give you that same valuation. Well, you're looking at about 110 points times $20. And obviously, that's going to be a little bit different in size, but for 50 minutes, making about $2,200, right? And so you can see that the power and the leverage in futures is really good. And also the interesting thing is that that's only per contract, right? So in futures, you could trade depending on the capital that you have. If you're funding your own account, if you're trading a prop account and or funded account, right? There are different challenges that give you some leverage to use multiple contracts. And so this would be equivalent to a one contract short on the NASDAQ here at that level, and then taking profit here around 19,00525, right? The cool thing is, if similar to options, if you were trading this with 10 contracts, which is a lot more volatile, you would be making 10 times that amount, which is going to equate to $22,000. And so now, while it doesn't seem much different than options, you can see that it does take you a lot less capital to make a larger amount, right? The leverage that you're clearing is a lot higher, and therefore you can make very, very large returns trading futures. However, it is extremely volatile and it is also very risky. So keep that in mind. All right. So moving forward, we could look at trading strategies for futures. They're very much the same across the board as stocks and options, right? You could day trade futures, meaning you could be a scalper. You can just trade short durations within one time frame, being the 1 minute, 5 minute, 15 minute, 30, 1 hour, 2 hour, 4 hour, right? Anything in that day. You could swing trade futures. If you're not trading on like a prop account, there's usually there's less restrictions, I would say. So if you have your own futures account, the cool thing with trading is that you could swing trade overnight, right? Because the market is 24/5. Obviously, that does expose you to some downside volatility in case the market does happen to move against you overnight, right? Or in any time frame that is that you're holding that position. Obviously, position trading means you could trade with heavier size, right? A lot more leverage. You can scalp, you could do momentum trading, etc. So these are all different things you could do all across the board. Same with stocks and options. Nothing, out of the ordinary, nothing different. Pretty much the same strategy you use on stocks, options, and TA in general. You could do the same with futures. When it comes to risk management, you have to keep in mind that this is very, very important because you are trading with higher leverage. That can equate to a lot higher losses. Does it mean that because you have higher leverage, you should trade with higher, risk? No. Same risk management principles apply. Whatever you put in, you can lose. So keep that in mind. The one thing with futures that makes it a lot more risky is that basically futures has something called liquidations. So because you have to maintain a certain amount of margin requirement, if you do happen to dip into loss in your portfolio, essentially in futures, it will dip into your margin requirement balance that you keep before hitting a certain threshold where it could liquidate your entire account. So that is something to very much keep at the forefront of your trading, is that stop losses are freaking critical. You need to keep stop losses in your futures trading, and or if you're not, right, and you're actively trading, meaning you have not left the position, you're in the position, you haven't left the computer screen, you need to be able to exit your positions when you start occurring some losses. Otherwise, you will essentially lose your account, right? It's very, very, very volatile. Tools and platforms. So there's a few popular platforms. I personally, some people like Thinkorswim because it's right there. Most if you're trading stocks or options, most people use that. I use that. I know it's now Charles Schwab, kind of the Thinkorswim platform, so you can use that. Tradeovate is another great platform that I love to use. It has kind of like a Apple operating system or UX UI interface. It's wonderful, very easy to use. NinjaTrader, same thing. It's a little bit more like Android-y, if you will, but definitely a cool platform to use. These are three that I've used and I think are really great. And at the end of the day, really the factors are just to consider, what the fees are, the support features, and other features and feel. So that's all personal. But basically, those are three different brokers that you could use in order to trade futures. Okay, so one of the things we're going to talk about really quickly are common mistakes to avoid. Number one, over leveraging your account, right? If you are trading with a balance of about $500 or $1,000 or less, and you start trading the E-mini or the S&P 500 futures or the Nasdaq futures, you're probably only going to be able to trade like one or two contracts at max, right? So trading the full allocated contracts that you can trade is going to be over leveraging your account, allowing, more potential loss to hit your account or liquidation. So you want to keep that in mind. You can trade something called micros, which is about 1/10 the size as you build your account. If you're coming in with a lot more money, maybe 10, 20,000, 30,000, then trading the regular minis at one or two contracts where instead of, over leveraging with 3, 4, 5, 6, 7, 8, 9, 10 contracts, while you can make a lot doing that, you can also lose a lot. So common mistakes you want to avoid are over leveraging your position size. You don't want to ignore, your risk management. You want to keep stop losses still in place. You want to keep them tight. You want to kind of keep your own risk management allocation rules the same that you would with options or stocks, whatever that may be. In futures, you do not want to chase the market, right? There's a lot more slippage. And so basically what that means is when the market reacts to something like earnings or FOMC with Jerome Powell, there's going to be a lot more slippage in one of those candles where it can move a very quick 100 points. And if you market order by chasing the market, you will instantly be up or down, right? You can get filled at a very, very wide spread and not in your favor. So that could be very bad, right? You want to kind of avoid doing that and stick to limit orders essentially. And the other thing is just not having a trading plan, right? That just basically goes across the board with stocks, options, everything else. You always want to have a trading plan on where your entries and exits are, what your strategies are going to be, and implementations for if a trade goes against you, when it goes into your favor, where your TPs are, etc. All right, and pretty much just wrap it all up. Basically some key points, futures basics on ES&NQ, right? We talked about the overview of futures trading, right? Basically, you want to stick to the E-mini S&P 500 and the E-mini Nasdaq-100. Obviously, you could trade other commodities like natural resources like gas. You could trade, different types of futures like soybean, orange juice, etc. You can trade whatever you want to trade, but I personally stick to things that are with a lot more movement or liquidity, like the S&P 500, right? And the NASDAQ. If you're already trading SPY or SPX, like I do, then it's a pretty good instrument to trade. Trading mechanics and analysis, right? We talked about the fact that you could buy and sell futures. There's no theta decay. They do have a higher margin requirement, right? Fundamental and technical analysis still apply, just like every other, type of trading with stocks or options. We talked about strategies and risk management, right? You could day trade, swing trade, etc. You want to make sure your position trading is, at what you can handle in your own exposure. Keep the same risk management techniques that you have to avoid, large losses. And then we also reference some tools and resources, right? Essential trading platforms, common mistakes, and some other further learning resources. Just want to thank you guys for your time. Thank you for being a part of this workshop. And if you have any questions, feel free to DM me and get in contact. Well, with that being said, hope everyone has a good day, happy trading, and we'll catch you in the next market open.